All right, back to work. Back to work. What a fantastic day today. We finally got the pullback. It wasn't a huge pullback, but I know a lot of you guys made some pretty good money on that two-legged pullback that we talked about in last night's video. So well done on that. But let's get back to work. Let's get back to focus here tonight. We got some more winning trades to track down here for tomorrow. Earnings are out. Netflix is out. Tesla is out. And the game plan tonight, I got a lot of great trades I'm tracking for tomorrow. I'm going to cover my game plan tonight to give you guys a roadmap to make some money off the reaction to these earnings reports tomorrow. So a very important video tonight. I got a great lesson for you guys tonight. Before we jump in, though, I'm excited about tonight's video. Before we jump in, make sure you subscribe to our channel that way you don't miss tomorrow night's video. And if you like this stuff, if you enjoy these videos here, hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for sticking around late tonight and watching the channel. But enough of the intro, Joe. Let's get ready for Thursday. Boy, finally got that pullback. Boy, if you're with me in the trade room this morning, fantastic job today in the trade room. Starting off, though, on the 60-minute time frames here on the SPY and the E-mini, and of course the QQQs and the NASDAQ. Remember, I like to use the 60-minute time frames to help me plan the best trades for tomorrow. And then later on in the video, we'll drill down to some faster tick charts and we'll go over my favorite entry setups, right, to time the entries for tomorrow as well. Boy, everything's still very bullish right now, right? S&P bullish, NASDAQ bullish. You probably don't need me to tell you that right now. And of course, now that we have the big earnings reports, right? Netflix and Tesla coming out this afternoon, now we can get a game plan how to make some money on this stuff here for tomorrow. Everyone's waiting for pullbacks right now. I've got some great breakout pullback areas I'm tracking on both the S&P and the NASDAQ. We'll talk about some slightly different ideas tonight about how to buy some breakout pullbacks. You know, pullbacks are easy, right? But timing the entries can be difficult. So we're going to talk about how to time another great pullback entry tomorrow morning. Before we go deeper, though, and get into the trades for tomorrow, let's all check the news here, get on the same schedule for tomorrow. We have two items of news that you want to be aware of. One, of course, is the block at 8:30. I'm not so worried about that jobless claims. The Philly Fed number should be the big headline at 8:30 tomorrow morning. And, of course, you got the existing home sales number at 10 o'clock Eastern time. Remember, anytime we see big red star news events at 10 a.m. Eastern time, you should be interested in that 10 o'clock to 11 o'clock block. We see a lot of great setups in our trade room between 10 o'clock and 11 o'clock as we react to that 10 o'clock news tomorrow. So keep that on your radar for tomorrow. 8:30 and 10 o'clock are the big catalysts. We don't have any more really notable or market-moving earnings reports until next week. We, of course, just heard from Tesla, right, and Netflix. We're not going to worry about these companies the rest of the week here, but next week, we're going to kick this into high gear. Next week is peak week, so a bit of an appetizer for us here this week. Don't you worry. I'm going to cover the earnings reports for next week as well. So we got a bit of a break on earnings the rest of the week here this week, and again, 8:30 and 10 o'clock here. Keep those on our radar here for tomorrow. Now, back to our charts, right? The money is made on the charts. Let's go over all my favorite trades now. Starting off on the S&P and the SPY. We'll cover the NASDAQ and the QQQs. Each one of these markets, both these markets are pretty similar, but I think you'll see tonight they have a couple kind of key differences here right now. So, like I said in the introduction, we're all bullish here right now. We're way, way, way high up on the chart here, and everyone's waiting for that nice deep pullback, right? These can be a bit tricky to time those pullbacks, so we'll talk a lot more about that in a moment, and I definitely want to make sure we know if we do start sliding around sideways up here, because anytime we see a really big move like this, anytime we see a big move, we know a sideways range is likely coming at some point. So let's drill down now, because we're not going to trade off the 60-minute chart. You can if you want to, but I think you'll find it a lot easier to make money using tick charts. Tick charts make everything easier. Now, upper left-hand corner, all of the time frames will be in the upper left-hand corner, the 7,000 tick chart. This is the 21 EMA if you're watching for the first time, all right? So be aware of that. Now, if you have taken my free trading classes, or if you're a member of our members trade room in the morning, this should be a very, very clear picture for you. Right now on the S&P, it's a bull market into a trading range, right? It's bullish into a range. That is the most important factor on this chart right now. And again, if you're with us in the trade room each morning, you know how much I love these. So the key to this is the range itself will act like a magnet. We have an overall bullish directional bias. So what I'm going to do is I'm going to find levels of support below the range. For example, I got the amount above the range projected down below. We call these pendulum swings, right? You guys learned about these in the free trading course. We also have a large correction zone I'm watching down below as well. I've got a key. If you zoom out a little bit here, right? If I zoom out a little bit, I got a prior high right there. Lots of support down there. And you'll notice a multi-day channel on here. Connect those big highs up there, right? That multi-day channel. So again, the most important factor right now is bull market up into a trading range. I want to buy off of this area, right? It could be here, it could be there, it could be here. Remember, it's very difficult to pick the bottoms on these moves. So in a moment, I'm going to talk about how to time that perfect entry here underneath that trading range. Now, what you want to think about on this, okay? And if you're with us this morning in the trade room, this is going to be a little repeating we said this morning in the trade room here. What you want to think about is as we go lower, this trading ranges love to break out pullback. So what I'm going to do is I'm going to look for an entry down here, right? And I'll talk about 3, maybe 4 different entries tonight, how to time the entry down there. What you want to think about, though, is as we go back higher, the underbelly of that trading range usually becomes an area of resistance. And oftentimes the bears will come in and they'll try to roll this back over and take out that low before they try it again. Okay, so knowing that scenario, I'm going to be looking for the entries down, again, support area below that trading range. I'll be looking to take a good chunk of that position, probably half of that position, off on the underbelly of that trading range. We'll try to hold on to the rest of that position to go all the way back up and take out these highs, right? That would be the dream come true scenario, right? We trap some bears in. We'll talk about the entries here in a moment, right? We then use the underbelly of that trading range to peel off, right, half the position, quarter the position, 3/4, whatever you want to do there. We'll talk more about that tomorrow morning in our trade room, and then leave a runner, right, to try to take out that high, right? Now, what happens oftentimes is we'll get that half off, the market will roll back over, and now we have a double bottom, and double bottoms make for great reversal areas as well. So got a lot we're going to cover here as far as entry patterns. The 2 entry patterns that I want you guys to really be ready for here tomorrow, and you guys are learning these in your free trading classes, are failures and traps. Okay, well, specifically, it's going to be 2 try failures, right, and traps. Okay, bear with me. You'll see what I'm talking about. Now, ideally, I want to get this thing to make that strong run down, right? Get down into some of these big support levels we have down below. That's the ideal. Now, again, it can be difficult to predict how far this thing will go. So instead of just predicting it, what I'll do is I'll wait for now. Remember, long-term bull market, right? Deep pullback. Buyers are going to want to buy this dip, but the strength of this move, like I said earlier, will oftentimes pop up and roll back over. So I have to be careful. I don't want to force it. What I'll do is I'm going to use what I call a failure pattern. Okay, now, because of the potential size of this move going lower in the wake of earnings, I'm going to use a variation of the failure pattern you guys are learning in the free trading course called the 2-try failure. Let the bears try twice. And the goal of this is rather than trying to pick the bottom, I'm going to try to go out and use their stops to fuel that run going higher. All right, these are called 2-try failure patterns. Okay, now that's if we get that deep pullback. And again, this is almost identical we teach in the free trading course. Now, the next thing is we may not get that deep pullback, right? I would love the deep pullback here. I'm sure everybody else would, right? But again, we get a big channel, right? Big multi-day channel. We get a pendulum swing. Got a lot of levels that we may not get that deep pullback. Now, this is where the second pattern comes in. It's called a trap setup. It's the same basic idea, but if we don't get that deep pullback, what's the concern? What's the concern? The concern is we're buying high, right? I want to buy low. So if we start holding off the pendulum swing, holding off that channel, what I will then begin looking for is what I call a bear trap. All right. Now you guys are learning these too in the free trading course, which reminds me, if you haven't taken that free class yet, if you're not making consistent money in these markets right now, the markets are way too good not to be doing well right now. What I'll do is I'll put a link up here for you in the upper right hand corner for our free trading classes. Grab that link, take that free trading course, because the strategy you'll learn in that video series will show you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be each day. And most importantly, I'll teach you 4 of my favorite entry patterns to help you start making money on your own. If you're tired of missing the best trades each day, if you're not getting the results you want, grab that link that popped up there. I will also put all the important links tonight down in the description of the video in case you can't get that pop up there on the YouTube channel. All right. So as we dig lower here, this is exactly what you would expect. The question right now is do we get that shallow pullback, right, with that bear trap? Why bear trap? Because we want to buy as low as we can. Now think about this entry pattern. Okay. Think about this. It's a higher high in price and a trap low. All right, I go over this stuff in the free trading course, right? If we go lower now, right, now the concern isn't buying high. Now the concern is momentum, right? There's a lot of momentum going lower, and who knows, right? They may keep going for a bit further. So I don't want to pick the bottom. I want to rope the bears in. And then as my first mentor in this business always said, think about where their pain is, right? And buy into their pain, right? This is an area where potentially everyone is a buyer, right? Think about it, right? Buyers are buying low, and if sellers get stopped out, they become a buyer as well. This could be a very, very successful trade. And again, remember on this one, remember where the target's going to be, right? We use the underbelly of that trading range, right? That's where half off or quarter off, right? You want my opinion? And we'll leave the runner as we go, because what may happen is we may end up rolling over, right? And taking out that low, and I want to make sure we lock up that reward. Now, let's talk about that. Let's talk about that double bottom, right? Let's talk about if we do go lower, right? We pull up. It could be here, it could be here. I don't know where it will be yet, right? But let's say they do roll over now, right? And they do take out that low. All right, you'll notice this area right here. That area, that 45, 65 area, is a very, very attractive area on the 60-minute, right? If I had to guess right now where the most amount of buyers are waiting, it'll be down in that area right there, 45, 65 and 3/4. Obviously, give or take, right? It won't be to the tick, right? So be aware of that. But that area, right, is right there, right? So we may end up rolling lower, trap the bears in, popping up, rolling back over, right, and taking out that low here. Now, what do we do in those situations? Well, if you watched last night's video, you know that double bottoms are kind of the easier one to trade off of. And the reason I say that is because if we get that pullback and they retest the low, remember, anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest, right, of that level. So once they retest the level, it's mission accomplished, right? The bears got what they wanted. The professionals, the smart money, are going to sell high. Now in come the rookies coming in, and now this is much easier. We can be a lot more aggressive now. Now bears come in, let them try a couple times. Again, use their stops to create that fuel for that run going higher. Now, a little bit different game plan on this one, all right? A little bit different game plan on this one. Once we get that double bottom now what I want you to do is look for the 1, the 2, right? We'll trap those bears in, and what we'll try to do is get this thing to begin to pop, right, and run higher. When they pop and run higher, okay, watch closely. I'm going to draw a trend line off these highs. I'm going to bring that trend line down off that low and create a channel. Okay, now, what do we always say? Look left and look for the first test, right? Look left, prior swings. Prior swings are usually where the money is made on this channel. Okay, now we talked about earlier, right? Failure patterns. And my favorite on these are traps right below some prior swing. But in all reality, guys, this could easily be get the moving average going higher. We get below the moving average. The bears come in. They try to get short. We use the stops as fuel for a failure, into a pullback, into a strength move. And again, we know where the market wants to go, right? They want to go back up into that trading range and take out the opposite side as we go. So if we do get that double bottom, right? If we do get that double bottom off of that, right, off of that low, again, 2 try failure because we're very bearish in momentum at that point, and then watch that pop up and grind higher and try to grab that trap or that failure or that pullback, or if we get it, if we have enough space up here, maybe a strength trade like you guys are learning in that free trading course. All right, guys? So that's what I'm looking at right now as we start rolling lower here, is trapping bears in and looking for that run going higher. Now, I want to talk briefly here. Right? If we do get, let's say for example, that we do get this bear trap off the low. I'm going to grab the NASDAQ in a moment. Don't you worry. We'll get to the NASDAQ here in a moment. Let's say we do trap these bears in and the market races back higher. Can I sell up here? Right? Can I sell this? Well, what we want to do is you want to think about remember how big the market was above is below. So you want to think about how big that move down is, right? Obviously, we don't know what it is right now. And then project that going higher. And that will be the key area we want to take out, okay? Now, in this situation, we have long-term bullish and we have short-term bullish, okay? So everything's bullish as we go higher. If I want to sell back down, how would I do it? This is where, well, ultimately, you're going to flip that pattern over, all right? Momentum is the concern here. Very bullish in this example, both short-term and long-term. So in order for me to even consider being a seller, right, coming in off this high, I have to take out that pendulum. Sorry, deleted it by accident, right? Take out that pendulum swing, right? Take out other side of the market, and then I got to go in and start making sure this thing doesn't keep going, right? Because a lot of momentum, this could easily hold the pullback and blast. Okay, so what I'll do is I'm going to use this similar pattern. Again, respect those buyers. Let those buyers try once, right? Let them now try twice. And we're going to use what's called, it's basically wrapping together a failure pattern and a bull trap. I call these crown reversal patterns off the high, right? So again, remember, if we do roll off of that low, there's a lot of momentum now, both short-term and long-term. Can the buyers break through that high? If we start seeing the buyers try once, try twice, right? Remember, we're not going to pick a top on this, right? That is trade suicide, right? Picking tops is an easy way to lose a lot of money in a short period of time. Once the buyers try a couple times, though, now we know where their stops are. A nice strong signal candle, right? We're going to look for that short off the high. One last thing about the short off the high. Remember, whenever we're going against that long-term direction, this is a half-size position. It's a quarter-size position. If you're relatively new to trading, this is a zero-size position. These types of trades are for people who have already proven to themselves they can make consistent money going with the trend. All right? So that's all I'm going to say. I'll let you guys decide on whether or not you want to take that trade. But whenever I'm going against momentum, got to be careful, right? Got to be careful. Now, if we were to roll off the low here, and then we'll grab the NASDAQ in a moment. I thank you for your patience on this, right? If we were to roll off this low right now, What is very, very common when you roll off the low like this is what's called a pop and grind. Okay, so keep an eye on this. If we do roll off that low, oftentimes we'll go up, and again, we're so bullish overall right now. All the sellers, they may get run over here, and we may begin to grind and grind and grind. Okay, we call these pop and grinds. These are usually what happens whenever you have like a short squeeze and it kind of overshoots that high here. What'll happen is it'll roll up and separate and grind off that moving average. These are really, really simple. Okay, these are really simple. The key is don't chase it. Draw a trend line off those highs, bring it down to that big low, and now what we're doing is we're looking left. We're going to go out and find prior levels, right? Find prior levels of resistance, try to use them as support. That makes sense, right? So find those previous levels, right? Find prior swings, and we start looking for entries right off that low. Right now, I can't go over all the entry patterns here in this video, right? It could be a trap, it could be a failure, pullback combo, okay? And then remember, anytime we see a strong move like this, where's the objective? It's to retest the high. Okay, that's an easy first target, back to retest the high. And then what's the next target? The next target's pretty easy too. The size of that first leg, okay, becomes a measuring leg, and we anchor it off that low, and that will give us the size of that third leg. Okay, the easiest way to make more money is not to take more trades, is to get better at making the money on the trades you're already winning on, right? So by knowing how to leave that runner, and again, these are pretty easy, right? First leg, third leg. We'll talk a lot more about that tomorrow morning in the trade room. But now I think we have a pretty good game plan here, and we're now running right into that pendulum swing. So hopefully we'll get a nice signal here at some point here in the near future. All right, S&P looking great here. How about some NASDAQ? Yeah, NASDAQ's getting it's getting whooped here on the way down right now because again, Tesla and Netflix, even though Tesla is part of the S&P, it's a much bigger percentage, right? Much bigger piece of the pie on the NASDAQ. Right now on the NASDAQ, you'll notice here we're still pretty bullish, right? We're still pretty bullish here. We now have, by the way, if you watched last night's video, what did I talk about last night? We talked about how whenever you see a big move like this, right, again, anticipate a range, but more importantly, remember that two-legged pullback we talked about last night? Does that look somewhat familiar here right now? We get underneath that 21 EMA, one leg, two legs. So we're getting into the good stuff, right? We're definitely getting into the area where we want to be ready here, right, for some action here. So we're bullish. We're trying to buy pullbacks right now. I think if I had to guess right now, I would guess the majority of people would like to either use the low of this channel, right? I got a couple correction zones down here, right? We'll talk about tomorrow in our trade room. Let's go drill down now, right, to our tick chart. Right, let's now drill down now, okay, to our tick chart here. And the NASDAQ is quite a bit different, as you can see, than the S&P, right? S&P is holding off of its low. What's the most important factor that we have right now on the NASDAQ? A lot like the S&P, it was bullish into a trading range, but then we get this very strong run down. Remember, anytime we see a real strong move in one direction, what do we expect? We expect a pullback and a retest of that level. We are obviously now continuing, right, through that level here, right? So bears, mission accomplished, right? That strong move gets taken out. Now, did you watch the first part of this video? Because we talked about on the S&P, we talked about a double bottom game plan, didn't we? Right? Okay. So we're right there right now. This is that big, right? This is that big kind of multi-day channel that we saw there on the 60, right? And again, we're kind of right into this kind of previous highs here right now, right? So a very desirable area to be a buyer. But what's the problem? What's the problem right now? The problem is momentum, right? Momentum is really, really strong right now. This is what you call a rotation off the high. We go up, we roll over, right? We're very, very bearish right now. So I want you to think about kind of what I said before on the S&P and the fact that as we make these big runs lower, better than picking the bottom on this, what's the best way to do this? Let's see if we can get these bears to chase this thing going lower, and let's make them pay by buying into the stop losses. Now, the one thing about this chart that you got to be careful with is this low right there, kind of this whole area right there. Remember what I said earlier? Oftentimes what happens is we'll get that failure, but they'll hold, right, and then roll it back over, right? Remember that in the S&P, right? We call this the underbelly of the trading range. Okay, so I want to be prepared for that here for tomorrow. So think about this area now as being a kind of a key area of resistance. So when I get these bears roped in, I'm going to be, well, think about it. If I use the same game plan we just talked about on the S&P, if I wait for the bears to try once, I wait to try twice, and then I buy into stops, where does that put me? It puts me right into potentially a bull trap, right? And I think there'll probably be a lot of bears probably coming in and trying to retest that low here. So how do I protect myself, right, against that breakout pullback, right? This level of resistance up overhead. You know this already. It's a bear trap, right? This is the way you buy a deep pullback like this. You wait for those bears to try once, you wait to try twice, and you avoid that whole problem. You avoid that whole area of resistance by buying as low as you can. This is where traps come in, okay? Now think about it. Okay, if I can get that bear trap going in, it's the same basic idea as the S&P. We're trying to go back up into that trading range, right? But again, with the concern of that overhead resistance, I have to buy as low as I can. Now, you can easily tell, right? What if we go higher? We go higher here right now and then get crushed right back down again. That's fine, right? I'm already in the money on that trade. We'll take a bit off at that high, move that stop up to point of entry, and hopefully, right, let's be honest, right? Hopefully it keeps on going, right? Hopefully our next target comes off at that 16,000. Hopefully it keeps on going. But remember, the key to longevity is just learn to survive, right? Learn to survive long enough. We need to think about risk before we think about reward. And so right now, the way that I'll be looking to trade this here for tomorrow is get that bear trap, right? Get that big chunk. And again, if it was me, it'd be a half off right here, right? Half off here, quarter off here, leave the quarter, right, for the runner. But that's the way you want to buy a real strong dip like that. And then remember, if they do end up rolling up, holding off that area, and then retesting that low, now this becomes a whole lot easier, right? Why? Because the bears, they've already spent their bullets, right? They've already emptied the clip. Okay, now we're not worried about those bears as much anymore, right? Now we can go in and try to trap those bears in. And where do you think a good first target would be on this reversal off that low? It will be right back up, bam, right? Take some off here. And again, hopefully, it'll keep on going. If it keeps on going, how do you trade it? Remember this in the first part of the video, right? If it keeps on going, if we blast up, right? Get our half off target, quarter off target, right? A good chunk of it right there. If we blast up, but we don't stop, right? We don't stop and roll over and become a range. No, what happens is we blast and we break through it, right? We break through it. Bingo. Now we know that range is now back within striking distance now. Now we know we go up. What do? We mark off that high. We mark off that low. We start looking left. We find prior swings, and we don't miss that first test off the low of that, right, of that channel. All right, guys? And again, at that point, it's all pretty gravy at that point. Now we got big swings for targets, right? Back up to the other side of that trading range for a target. All right, guys? So keep that in mind. Now, one kind of variation of this that I haven't talked about yet, which can also apply to the S&P. Let's say, for example, everybody gobbles this thing right back and it starts ripping right back up into that trading range, right? That doesn't seem very likely right now, but let's remember, we can't predict this stuff. Nobody can predict this stuff. It doesn't pay very well to make predictions. It pays better to be ready. That way, anything the market gives you, you've got a tool for it, right? So anyways, so if we V bottom off the low, what'll happen is it'll V bottom And while it's driving you crazy going higher here, it'll begin to flutter going higher here. Okay, we talked briefly about this earlier on the S&P, right? If it slingshots and runs higher. But if this thing, right, remember, ideally, yeah, I want to get that 1, 2, right? I want to get the entry like that. But if we don't, I don't want to chase it. What do? We mark off that high, we mark off that low. And remember, what's the problem here? What's the concern? The concern is we don't want to buy high. We have to wait patiently and buy as low as we can, right? And how do you buy low? Traps, right? You wait for that pullback. And again, I wish I had a crystal ball. I wish I could see the future right now. But if we do pop up and begin to grind, right? The giveaway is the grind, right? The giveaway is the grind. Once it grinds away from that 21 moving average, right? Then we go out, so we start looking for the entry off that low. And again, it could be a trap pattern like I'm showing you here. It could be a failure pattern. There are literally probably not 1,000, but a couple hundred examples of failures and traps in that free trading course, right? So you'll see that. People love that archive that we have in there as well. All right, guys. So that's another scenario I'm watching for. And keep in mind, right? Keep in mind that deeper pullback, that deeper correction zone, right? If they were to roll over and keep this thing going lower, we're going to keep on trapping in those bears, right? Using prior swings for targets. It's a pretty simple game plan here for tomorrow. And again, a lot of this is because of this very clear directional bias on the 60-minute chart. All right, guys? Now, let's face it. We're having a good game plan tonight, but I'm sure the marks will throw some curveball at us tomorrow. So tomorrow morning, anything can happen, but that's exactly why we have our trade room. Markets are messy, markets are wild sometimes, but tomorrow morning, every morning, we're going to get together, we're going to trade this stuff together. I'm going to put all the links you guys need to come join us in the morning trade room. It's so much easier to do this stuff when you're learning and trading along with us. I'll put the membership links, I'll put the free trading class links, all down in the description of the YouTube video. Grab those there. If you'd help, any trouble getting into the free classes, don't be afraid to call the office. Megan and I are always here to help answer questions, get you into the free classes if you have trouble, and you can always use live chat on the website as well. All right, guys, hope you learned a bunch tonight. Been a great week so far. We got more coming tomorrow. Hopefully, I'll see you tomorrow in the morning trade room with all the members. If not, we'll see you guys same time, same place tomorrow night. We'll get ready for tomorrow night's Thursday, right? Get ready for Friday's trading session. All right, guys, so be well, be nice to each other, and you better be here tomorrow. All right, adios, amigos. Bye-bye for now.